presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading on YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
Oh, my pleasure.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for tuning in. 3:07 p.m. Eastern Time. We got 53 minutes left to go in the trading day, and we got positive territory. Markets, we got risk on, tariffs off. Yesterday, the huge acceleration intraday, about 2 o'clock Eastern Time. The president announces that he has a framework deal for Greenland. We trade higher. 68.59, you hit a high above 69.40 yesterday, and we're just coming in to test that area, the highs of yesterday. 69.46, S&P's up by 0.5%. NASDAQ up by 0.6% right now, up 167 points. We'll take a look at the volume in a moment. The Dow right now up 0.7%, up 347 points, 49,612, and the Russell up almost 0.9% at 27.33. And that high there, all-time high today, 27.49. On a volume perspective, though, yesterday was the day, right? You take out the last 4 days of trading, you do it with volume in the Russell. We're not going to have that volume today, likely. 295,000 contracts yesterday. You're at almost half of that, 166,000. You take a look at the volume in the S&Ps on a daily basis. Just huge days. Now, the one thing is you didn't quite have the bounce, but huge bounce, big volume, okay? Not quite as big as you had on the day down on Tuesday when you came back from the long weekend, but today, very light volume. Nothing compared to what we had on the bounce yesterday. We'll see if we can get through this gap that was left open from the weekend when those tariffs were first announced. You jump over the NASDAQ, same thing, volume, 448,000 contracts. We're getting back that gap over the weekend, but nothing like we did on the bounce yesterday. Should we trade higher? And yeah, S&Ps, same deal, at about 1 million contracts, and you did 2.1 yesterday, and we got about 50 minutes left to go in trading. Now, yields. So the market's gotten it back, but check out yields. Okay, I talked about this on the morning program, and nothing's changed. You get the 10-year down by 2 ticks. We're at 4.25% right now. 4.25%. We're getting a new Fed chair in 4 months. You're probably going to find out that name in the next couple weeks. And you're talking about from where we were in October, down 2.5 points. 2.5 points. You were flirting with 4%. We've added 0.25% right now in terms of the yield on the 10-year as yields continue to rise. But again, on a volume, that's a weekly. It's been a big week. Okay, this is only the third trading day of the week, and you're at almost 7 million contracts in the 10-year, and you did 10 million last week. Okay, it's a short week. We probably won't get there, but you average out the daily volume. It's a big week. Yields continue higher. Even with continuing higher yields, not extending the dollar, though. Dollar weakness today, down 41 pennies at 98.34. We continue to chop around this lower portion of this line. You're talking about a trend line. This thing's been in since 2008. Okay? We hit it in the lows of 11. You chopped around 2013. You bounced off that area in 2014. You almost got there in 17. That was where you found support in 2021. And that's where we're back to again in 2025. You break below this area, folks. Watch out. Okay? 90s right there. You break below this area. We've been chopping around. You hit as low as, back it up on the daily, you got as low as 96.21 there. Okay, and I think we're heading back down there. Dollar's facing weakness right now. Yields are under pressure. And metals are saying it. Quite a day. It continues. We're going to talk to our man Tim Ward at 3:30. We'll talk some metals. And yeah, it's not stopping, man. And on a volume perspective, huge volume the last couple of days. And yeah, anytime you get the tariff volatility, it's going to be rip-roaring when you're talking about metals. That's your daily. You take a look at the weekly. And again, you're going to do it but you're not going to get above this October volume. Okay, this was the cleanest strength out there. And what happened is that we got some nice executions in the gold report, okay? And we got stopped out of them at some point, but risk-reward wise, all right, I want to see a pullback on lighter volume right now. That's what I'm talking about. You're completing an A to B, C to D. We're almost there, right? And that's just from where we were in August. And imagine, folks, that's where we were 5 months ago. And gold is completing an A to B, C to D, and the A to B leg went from 33.53 up to 43.92. Over $1,000 A to B leg. You pull back to a low of 39.01, and we just did 1,000 points again. All right, and what I was going to say was that was a beautiful setup, right? We'll get more of those setups, I think, but we need a pullback. I'm looking for a pullback on lighter volume, and we got some volume at these highs, but not quite as clean as the run-up you had in October. Now, silver. Silver's got some volume, man. Look at this. All right, there was no pullback in silver. That's the pullback we had in gold. I mean, imagine if you try and do the same thing. Silver's just outperformed dramatically. Look at that. All right, there wasn't even a pullback, and since then, gold just did a 1-to-1 off that pullback. Silver's approaching the 1 to 2.618 expansion right now, but silver's got volume on this recent move. That's the most remarkable part about this. So maybe you got to pull back and test this consolidation area here that you were at from prior to the holidays, $80. Not showing any signs yet. Silver continues to look strong. But this week going to be tough to match last week. Right? Even with a short week, 874,000 contracts last week. We're at 423. Tomorrow's Friday. Okay? You're not going to get the volume, and you're not even going to get the volume if you average out the daily. That was a remarkable week last week. This acceleration, volume-wise. Yeah, this week, you had Tuesday, and then yesterday, pretty paltry, and today, even going to be lighter. Okay? Look at these 2 days. 126,000 contracts and 100,000. You'll finish around 126 probably or something like that today. Some of the lower volume days since silver has been pushing above 65, 70. It can always fade higher, folks. And I'm not spreading fear, okay? Rates are going to be under pressure. The dollar's under pressure. The metal market longer term is great. And I understand why, with these types of returns and with what's going on with the debt and the store of value, okay, and whether the dollar's the reserve currency and all this stuff going on, right? Whether are we in a global economy anymore? Howard Lutnick doesn't seem to think so. This is stuff that's going to reorganize the strength in the dollar. And so there's some real heat that it's going to face. That's going to help gold and silver in the long term. But we're at 5,000 and we're at 100 and we barely have a pullback. Silver, like I just mentioned, that's not really a pullback. It's not. You went from $53 down to 45. That's a 15% pullback, okay, but in the context of making a run from 27 to 100. So, spend some time on metals, but I think you got to let it breathe, folks. But hey, 1-to-1, how about that? Just that quick, man. Gold's up $1,000 from where we were in October, and that's after moving $1,000 higher from August to October. All right, folks, stay tuned. We'll come back. We'll take a look at Procter & Gamble, up by 3.2% on their numbers. We're coming right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We have Procter & Gamble. So this thing's been on quite a decline over about the last year as the market rejoiced. I mean, look at this thing. You hit April lows, okay, with the market at 157. You catch a brief bid. Their earnings disappoint in April a year ago. You catch a slight bid with the market, and then you fall out of bed. And you go from 170 down to 140. Now we're catching a lift today, and this might be a story of expectations because, you know, as in the numbers, not ideal. But guess what? They know they're not going to be ideal. That's the reason why the stock just traded from 180 to below 140. And we jump over to those numbers. Higher prices. Okay, so maybe that's the ticket to stop the falling prices, to stop the falling stock chart. Cut the earnings outlook, citing higher restructuring charges. Okay, but the bottom line is they're delivering less goods. Organic sales flat. A decline in unit volume offset higher pricing. Yeah, so their sales are flat only because they're selling less goods and charging a higher price. Yeah. So 4% positive in the beauty segment, 3% in healthcare, and it was down 4% in baby, feminine, and family care businesses. They're looking for sales growth of 1 to 5% and organic sales growth of up to 4% for the fiscal year. The consumer products are looking for a rise of 1 to 6% for their earnings per share compared with a prior forecast of 3 to 9% growth. And the stock goes up. Tariffs are going to add almost $500 million to their costs. Why do you think they're jacking up some of those prices? And hey, it may be for the best, but just recognize what they are, man. They're taxes, and of course they're going to, this is a perfect example. Procter & Gamble shares are trading lower. Okay, their sales are flat because they're selling less goods at a higher price, period. That's what the earnings say. And it now expects commodity costs to be neutral compared with a prior projection of $100 million. Both are after tax. But the market rejoices, man. And on a weekly basis, you're going to have some volume this week. See if we can get above last week, a nice sign of strength. Put this thing on a monthly. There's a beautiful uptrend channel. And you can see these channels, folks. I always think of our man Bud Rolfs, a former host of TFNN, newsletter writer. He's the channel king. They're so powerful, and it makes sense. It's just the momentum of a market, right? The range trade of a momentum market, up or down, or sometimes you get a consolidation sideways. Yeah, on a monthly basis, that was a lot of selling last month. We'll see. This is This is going to be interesting. We got 7 trading days left in the end of this week, while today was one of the 7. Yeah, we got 6 after today. You did 234 million. If you can engulf that candle, that was a huge volume bar. We did 234. We're at 168. So you got to do about 10 million a day. Ooh, we can do that. Okay. Look at this. All right. And folks, don't be worried, okay, about not buying the bottom. All right. What I learned a long time ago, when I became okay with not needing to buy the bottom and not needing to sell the top, it was the best thing that I came to terms with. And your risk-reward ratio goes up extremely if you're not trying to cherry-pick the bottom and always wait until you get to the top. And it's a great example. If we can come out of this now on a weekly basis, on 4 days, but guess what? Average daily volume, you're probably going to have a bigger number than this day that was over 5. That was over 63 million over 5 trading days. So you're talking about what, 12.5 million, almost 13 million shares a day. We're doing more than that right now on average daily volume, and on a monthly basis, that would be a tremendous way to take over that prior month and do it with volume. If we can do it on a monthly basis, put Procter & Gamble on your chart, man. That's how you do it. And hey, you're back to 2020 prices on Procter & Gamble. That's the other side of that. That 140 area, that's where you kind of found support back in the better of 2023 as well. Let's go back even further. I mean, look at this. That's the highest volume bar we had since the COVID lows, and you might take it out the next month with volume. That is powerful, folks. I'm going to start watching that. Might have to start scaling into some Procter & Gamble. And here's the thing. You're scaling into this, okay? Pick a stop. You know when you're wrong. The thesis is we found support if you take out this low, okay? You could even start scaling in right now as you wait for the end of the month. On a weekly basis, you might be there as well, right? You might take that out and do it on increased volume. And if you do, it's going to be the biggest week we've had in a while. Average daily volume it's going to be. Because we got 3 big days. 13 million, 14 million, and 13 million right now. Consecutively. And yeah, you just put a stop under somewhere around the area that we're at. As in, if you're wrong, well, guess what? Then that means that we're probably not going below somewhere around this 140 bar. Not even sure you want to give yourself $10, because if the break is real, then the break's real. The tough part, of course, is that you're buying that equity and the market's trading at 7,000, and there's more risk in the market. But hey, strength is strength, and you got volume on that move. Jump over to Tesla shares, back to a daily. Up by 3.7%. We check out the weekly. Yeah, look at this volume, man. So that's Christmas week, New Year's week, and even the holiday weeks after. The volume drying up on Tesla since you made that run up to the high of 500. Hey, you're pulling back on lighter volume here. Okay, you got volume to the upside on Tesla. Ooh, on a monthly basis, a little dicey, huh? Look at this. Okay. What's going on here? That's a little worrisome. Nice sign of strength off of the tariff lows. You had some volatility in here when he was going at it with the president, of course, on social media. I think that was back in June of last year. Since then, not very impressive volume. Look at the volume we were doing out here in 2023. Just keeps going down, and boy, this one's going to go down for sure. We're at 900 million shares. You did 1.6 million last month, and that was with Christmas. All right, we'll check in on metals. We're making highs as I speak, folks. Gold at 49.30. Silver within about 50 pennies of those highs. Platinum, oof, look at this run in platinum, man. Last night, platinum was at 2,400. We're up 10% from where we were at 7 o'clock last night on platinum. And natural gas. If you're in this trade, be careful as well. This natural gas trade, when you go back to some of the volatility, just remember, folks, history, it doesn't often repeat, but it rhymes. Okay, some of the runs that we're having up right now, Look at this natural gas run. Now, we had 2021, there were big storms of natural gas. Texas is dealing with it again right now because they're a bit isolated. And this thing can last. I'm not saying, but at some point, the volatility, I mean, this natural gas, nonetheless, we got some volume, and natural gas jumps from $3 to $5 this week. We're rolling over now, whatever's going on, though. We sure are. We're coming back to where we were yesterday. We're at session lows for natural gas, up 0.8%. All right, folks, stay tuned. We're coming back with Tim Ord. We'll talk some markets. We'll talk some metals. Always good conversation. S&P's up by 31. NASDAQ up by 152. We got gold making a run for 5,000. We got silver making a run for 100. Stay tuned, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&P's up by 28 points right now. We got gold record highs, up 1.9% at 49.29. To talk about the market action, folks, we're going to be joined by our man Tim Ord. You can check out Tim's website, folks, ord-oracle.com. There he is right there. And then don't forget, under the services tab, you head on over to TFNN.com, you hit that services tab. Tim's got 2 great webinars, The Secret Science of Market Tops and How to Identify Market Tops, and 6 secret ratios every trader should know. Tim Ord, good afternoon.
Good afternoon. Actually, the market looks...
Where do we, a lot of talk of metals and silver continuing, and the market, man. What do you think about this market, Tim? Great calls recently, man, Tuesday as well. Pretty remarkable price action. What do you think?
Yeah. Do you want to cover the S&Ps first, or we should just...
Yeah, let's do the market first if we could, please.
All right. This is the ARMS index, the 10-day trend, which is most important. I got the bottom window is the 3-day trend. Next one's higher 2-day trend is a 5-day trend. These two lean bullish, but the 10-day trend is most important because that's 2 weeks of panic. So we're making a significant low of some sort here that's worth hanging on to the S&Ps. I kept in my S&Ps, even though we pulled back here a couple of days ago, close to 2%. But with the trend going up on the 10-day up to 1.9, we're not starting any meaningful decline here. That was just a shakeout and an uptrend. So I'm staying long. I don't see any trouble here. Matter of fact, that chart, I think this is a chart we talked about Tuesday. We talked about the top window is the SPX VIX ratio, and this is the SPS, the SPY. And I got Bollinger Bands on them, and I was talking that you get below the Bollinger Bands that quick, normally you're at a low. We happened that there, and even this last time we had that pullback. In other words, the market got stretched just too far and needed a snapback rally, and that's exactly what happened. Because you had the SPY VIX ratio get below the Bollinger Band, and you also had the SPY getting below the Bollinger Band. So the market just snapped back. Can we have a test? Maybe. I don't think it's going to happen of the recent low. I don't think that's going to happen. I think in general we're just going to move higher here. So it looks pretty good. This is a quick view of the bigger trend. Normally the top window is the SPY. Next window down is monthly VIX. The bottom window here is the SPX VIX ratio. So normally the VIX will start going up before the top on the SPYs, and it's sometimes, majority of times it does. Usually gives you a warning, and all these pink areas are times when the SPs were going up and the ratio was going down, and it did a decent job of picking out the highs. We had last one we had in early or late 2024 or the early 2025. Right now, we still got bigger, higher highs. There's a minor divergence right there on a weekly time frame. But if the SPs hold steady, if not move higher, going into the month end, we got another week to go, that minor divergence will go away. But my point is, it's not showing anything major divergence going on here. We got a minor one, but nothing major. This chart on the monthly time frames usually pick out the big moves, the 10% or more. So I don't think there's a 10% decline right in front of us at all. Maybe some minor stuff, but in general, I think you should hold your, if you're in the market, it looks okay. I think we're going to move higher. So actually, I'm going to flip down a couple of charts here.
Okay.
This is kind of when I get the point across. We look at the shorter term pictures, but this is a big picture. This chart goes back to, lost my tool here. For some reason it's not working.
That's all right. And you're going to be comparing the XAU and the SPX, right?
Yeah, we're comparing here. Too bad we can't get this thing to work. I don't know what happened.
That's all right. We can see your cursor as you're jumping around.
Okay, you can, right?
Yeah.
So, but anyhow, this chart goes back to 1982, and we built a trading range from basically 2014 to current time frame, and we just popped above that trading range. It was
Nice.
0.05 down to, I don't know what it was on the low end. But anyhow, it went sideways for 10 years. And XAU to the SPX ratio on a monthly time frame, when this ratio is rising, that means gold stocks are outperforming the SP stocks. When it's declining, SP stocks are outperforming the XAU stocks. And we just broke above that trading range. So 14-year trading range, we're breaking out of it. We close, well, the month's not closed yet, but we're at 0.062 right now. And so I guess you can pull back to now supports 0.05. But in general, we're going to work higher, probably all the way up to 0.15. Well, 0.15 is 300% higher than 0.05. What that implies is gold stocks will outperform the equity market 300%. So let me say that again. So this is just ratio analysis. So if this ratio does go to the next resistance, which is basically the 2010 high up here, that ratio will reach 0.15. So that's 300%. You take 3 times 0.05, you come up 0.53. That means 300%. So these gold stocks are still, in my opinion, the early stages. I got cycle analysis that says this rally we're currently in right now, and probably still in the early stages, could have lasted 2036, which is basically 12 years away. So this is going to go on for a while. This was probably, back in 2002, it went from basically 2000 to 2012, the market went up 12 years. So something similar is going to go on right here. So these stocks are though they're breaking out. Let's actually take a look at the current health of the market.
Can I just real quick, because it's so cool, man, how you do that. And I was just looking at the XAU, of course, and then you look at the XAU and you're at like 426 right now, right? And what do we have? The S&P 7,000 or something like that. So it's like, wow, okay, that's a lot. Remarkable. Last year, the XAU's at 100 and the S&P's at like 5,000. So it's pretty crazy, right? And that's what you're pointing out, just to put, when you break down those prices, that it's remarkable that when you do the comparison of the ratio, those numbers, that, wow, you would have needed almost 50 shares of the XAU to hit a share of the S&P at the beginning of last year. And now you only need like 15.
Yeah.
And that cool, Tim, right? I mean, that's what that ratio is saying, basically, which is remarkable on a percentage basis. That comparison.
Yeah, that's the reason why I want to point that out.
All right, sorry to stop you there, but even I'm looking at that, man, and saying, man, that is intense. All right, we're going to keep talking metals with Tim, folks. We're coming back. We'll come back with Tim Hoyt. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps up by 26 points right now, backing off from those session highs, but market's in the green. We're talking to Tim Ord, and don't forget, folks, you can reach Tim at his website, ord-oracle.com. And then he's got two great webinars under the services tab. We talk about some of these ratios here, folks. SPY VIX. Hey, Tim, could I ask you real quick when we jump into metals? You know, we got a question in the den talking about the TLT and the SPX TLT ratio. Right. I know you don't have a chart prepared for it, but have you been watching that? I know that's breaking out a little bit. What do you think about that? Any opinion on the one? I know you follow that ratio.
In general, it's not showing a divergence at all. A lot of times that ratio will start to decline as the SP's going up, and it's pretty much holding steady. It's not saying a lot right now.
Okay.
I haven't really covered a lot, but it's actually it's not bearish at all. It's leaning bullish, I guess you might say. As the S&Ps are making higher highs, that ratio is holding pretty close to the highs. So nothing really to say about it right now. It kind of just, it leans bullish. So
awesome. Appreciate you covering it. All right, back to metals, please.
All right, back to metals. But anyhow, so how long is it going to take from 0.05 to get 0.05? The only reason why I say this 0.15 right here is the highs up here. Normally highs are resistance or lows. This was a low back here. So we've gone sideways. We're breaking out. It's a 14-year base. So it's a long time. So this is going to be a long time rally. The longer the base, the longer the rally. Can the rally last, 14 years? Well, I'm thinking it could last 12. So that's my view on that. But here's another kind of a ratio, kind of doing the same thing. If you can kind of see it right now, we're basically going above the previous highs. This is the monthly XAU gold ratio, goes back to 1982. And it's also had a approximately 14-year base. It's also breaking out. In other words, gold stocks, when this ratio is rising, are outperforming gold, and vice versa. If this ratio is declining, gold will outperform the gold stocks. But right now, gold stocks have been outperforming gold over looks like about a year now, because we're in 2026. The rally started in 2025. But I think this ratio is going to go, 0.16. Right now, we broke above, basically that previous high was approximately 0.08. So that would be a double, approximately. Gold stocks outperforming gold by 200%. So there's a lot of stuff that these gold stocks are probably going to be like the dot-coms back in the 90s or something. A lot of these gold stocks are just going to fly. So which ones are they? We're kind of skipping around here, I know, but I just want to get...
No, I like it. Keep going, man. This is, metals, in focus, of course. Please keep going. It's great stuff.
All right. This method works really well. Last time this happened, this is a monthly chart. You always start with the biggest chart first, because if you get the monthlies bullish, the weeklies, the dailies will all fall in place, because the monthlies rule the weeklies rule the dailies, and all the way down. So you want to have a bicycle on the monthly chart. So as long as that buy sill's in force, I guess you might say, it's bullish. When it's out of force, it's bearish. But anyhow, back in 2016, this, I don't know, call it 2 cents, 3 cents, and it stayed on a bicycle. In other words, stayed above the mid-Bollinger Band until the point right here looks like about 20 cents. So that was about about a 3-year time span. So you're up, I don't know, 10,000%. So we're just flipping. This is a minor one right now. One reason why I'm kind of stepping into the minor ones, because all the major ones of gold stocks right now have really gone through the roof. And can they keep going through the roof, keep going higher? Yeah. But at some point, they're going to hit a consolidation. And what they're starting to do now, as I actually hinted over the last several months, that they're going to start coming back down to the lower price issues. And a lot of the dollar issues, the $10 issues, the $20 issues, $30 issues, they're up 100%, 200%. Some are up, 1,000%. So that's the reason why the monies are starting to come in on these lower price ones. And here's one. This is kind of do or die. You're 7 cents. Either you make a bunch of money or you're going to lose 100% of it. So take your gamble. But it's doing what it's supposed to be doing. The reason why this is a buy signal, if you look at the volume here, the volume was going up and the stock was going sideways. If you notice, the Bollinger Bands were pinching. It gets a buy signal when you have a sign of strength through the mid-Bollinger Band. And it's kind of hard to see it, but you got it right there. It looks like about, I don't know, September, October, November of last year. 3-4 months ago, you got the buy signal, kind of went sideways, and now we're breaking out above the mid-Bollinger Band, which is going to spread apart the Bollinger Band. So now the Bollinger Band is going to start spreading, and that's an indication that, the new trend has started. And this thing built a base basically from 2023 to 2026. It kind of just went sideways. So it's got a huge base. Will this one work? I don't know. But on a monthly time frame, this is a buy signal. Well, not all buy signals will work, and maybe this one will or maybe it won't, but the odds it probably will. So it's all probabilities. But, I got an email from one of your listeners wanted to present one. This is one. So where's your target? Your target's up to the previous highs. So it's up around.
And as you said,
cents.
when you step in, just to, because these are penny stocks basically, and when you're stepping in, you know that you're risking everything in that. Is that basically the deal? You can wake up and this thing's at zero, and that's basically your risk set up in these types of trades?
Yep. Yeah.
So hear that one, folks, because I love them too. But don't think that you can get into an equity like this and then manage it and take a little stop. They're high risk trades, and man, you get it though, you're going to get a reward for sure.
Yeah. Your upside, if this one works out like it's supposed to, so it's 7 cents goes to 35 cents. So what's that? That's a bunch of money, but percentage wise. Here's another thing too. Normally, when you get a low like here back in 2020, you want that low to be broken, and that's the reason why that dotted line's there. And you broke above that dotted line right now. So if you can't hold the previous lows, what the market will try to do is take out the previous highs, and that's the reason why this 35 range is the previous highs. So market analysis, no guarantees. The symbols SBLRF, and it could go zero because these small ones don't have a big I don't know, they don't have a.
I looked it up. I think the market cap of that company, the entire market cap, is $18 million. And just to, trading in and out of them, be careful of big positions, folks. When, that's the other part. But right, $18 million, right? It's like that's the entire company. So of course, if you're an exploration gold company that's worth only about $10 to $20 million, there's a risk. But as we know in this market, hey, if you got a chance in this market, if you can't make money at 5,000 gold and 100 silver, right, Tim? Then they probably got a problem. Yeah.
Yeah, so all this stuff is going to be just a wild time over the next several years. Matter of fact, me and your dad were talking about this back in 2023, and it kind of 2024. It took its time, but it came to fruition here, and so it's going to be fun over the next several years. So a lot of money.
And I was going to say, not that I can't believe, but yeah, it's like 2 straight years already And man, time flies, but we were at 2,000 a couple years ago. We're at 5,000. It's a remarkable run. Barely any pullbacks, remarkable strength. Tim, appreciate the time as always, the charts, the education. I hope you have a great day, great weekend. We look forward to talking to you next Tuesday, man.
All right, talk to you then. Thanks a lot.
Talk to you then. Thanks so much. Folks, check it out, ord-oracle.com and those great webinars under the Services tab. We're coming back for one more segment.
To focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets in positive territory. Gold right now, right near all-time highs. Apple on a weekly basis. Now, you're going to pull back on lighter volume. But this is quite a pullback. We're down $40 over the period of the last 6 weeks or so. That's about a 15% decline almost. You're at 248. That's your weekly. You take a look at the daily. Volume lightening up after that move lower. But there's all your volume. Okay, on Monday's action. We haven't caught a big bid. Think about it. You go into the weekend, Apple's at 256. We're $8 lower this week. The market's pushing all-time highs. Apple's got a bit of an issue, and I think, what potentially is there, as we've been talking about. I wanted to buy into Apple when they convinced me to buy a phone, a tablet, and a watch all at once during the holidays. So this is remarkable, but it was overvalued at the top end of the channel. We start hitting the bottom of this channel, I'm going to start looking at Apple, but we're not quite there yet. If you're really looking for a longer-term position and you get some action like this, you could think about scaling in to the bottom side of it. But we got a volatile market right now, and I'm looking for a little bit lower action, and you got volume on this move as well. Apple up 0.3% right now. Check back in on gold. About $8 off those highs. quite the run. 49.24. And silver, 96.20. Who knows? We might be at those 5,000 and 1,000 numbers tomorrow. Procter up by 2.8% right now. We check in on Netflix after their earnings. Okay, yeah. Netflix got a problem, man. Now, I was talking about this yesterday. All right, you get into this equity, protect yourself against where we are right now, because you're right at these lows that we had from last year, and you break through here, at a minimum, you're going down to test this bar, which probably brings you down to the low of that at $67. Okay, but realistically, this is what's hanging out there. A high of 57.96. In the short term, okay, the market does not like $100 billion acquisitions. And, this slow bleed, right? And it's not a slow bleed with volume. Look at the acceleration. The market's higher. Netflix in trouble today. Trade lower. All right, not quite the volume, though. Netflix off 2.3. Folks, thanks so much for tuning in. Have a great night. Have a safe night. Appreciate you being here with me at TFNN. I'll see you tomorrow morning for the morning market kickoff. Have a great night, folks. Enjoy it. Thanks so much.